Nice.
Hi everybody, this is Osprey from mychartcoach.com, and in this video we're going to take a look at some of the hottest stocks from today. Some of the stocks that were some stocks that were in play today and running. There were quite a few stocks that were up today, and so the big winner was CNET. As you can see over here, it closed up 615%. So congrats everybody. That was a giant move. As you can see here, it had the big gap up open today, and so yeah, it had it started off the day. We put out alerts around $3, $3.50, something like that, and it took off running. It ran all the way up to $12 where it hit a climax spike and pulled back. As you can see, today's candle did close above that upper Bollinger Band down here at 463, and you have EMA 4 at 403 as the first support level. So if the candles do work their way back into the bands, those will be the key levels to hold. As you can see, there was a P-star bull flip today. There's a giant volume spike. And then notice the parabolic spike on MACD. The MACD is super vertical, which signals the move is unsustainable. Now, if you look at the 15-minute chart, you'll see here that this was the gap up open, and here we go. This was the gap up open, and then when it pulled back down here and held support on the EMA 4, it was signaling that it was still in play, and so we put out the alerts. This was the runner, and then it kept riding EMA 4. It came back, it held EMA 8, and that's similar to what happened end of day here. If you could see here, there was an inverted hammer that formed at 3 o'clock. Notice that was also the largest volume spike of the day. So you have the large volume spike, and you have the long upper wick from high of day. This is what we call the climax spike. And so when you see a doji or a hammer form during an uptrend after a gap up open above the upper Bollinger Band, many times that signals a temporary top, and so especially when so that was your signal, that was your clue. A lot of people locked them in up here, so congrats, way to trade everybody that got out between 10 and 12, and then that red candle, if you didn't get out here, was your signal. Okay, I better lock them in as it's pulling back, and so the candles did work their way back. It bounced off of EMA 8 down here at 801. That's going to be the key level to hold. If that breaks, you could see a drop down to EMA 13, and then possibly down here to this middle Bollinger Band at 589. It has to hold the middle Bollinger Band to keep this uptrend going. If it breaks below that middle Bollinger Band, it could drop down to the 50 simple moving average at 329. As you can see here, the high close resistance level is right here at about 980 or so, right below $10. That's going to be the big level to break. It has to get above that level to head higher. If you see it drop below $8, then you could see it consolidate, possibly head down to 6. Now, if you look here at the monthly chart, you'll see here, okay, so this is a multi-year monthly chart. It came up and it had broken above this 2014 high close resistance level temporarily. And when we first posted this chart, it was above that level. And what we were saying is, that would be the key level to close above. You can see the annotations down here on the left for the month. That still is the key level. If it fails to, if this level turns into resistance, then you could see the candles pull back into the bands, and then you have the 100-day simple or 100-month simple moving average down here at 390, and you have EMA 4 at $4. So that would be the first big support level on a pullback. Now, to the upside, you could see where it hit resistance was back here in 2010. You could see there was really big resistance here at this 11 to 1150 zone, and so it hit that, topped out, and pulled back. If it could get above 1150, the big levels to break is going to be back here from October 2009, or what is that? That's heading into December of 2009, and that's up here at about 1375, or wait, that's 1350. So if it can get above this 1150 zone, then 1350 is the big level to break. If you see it fail to get above this 1140 level, this close here from the 2014, then you could see it pull back further. It is currently under pressure after hours, and so that is a red flag. So keep that in mind. That there are other China stocks that are running right now. They're running the entire sector. You know how that goes. They're running multiple plays. They have been for a little while, and so today these are the ones that are hot. And so having it cool down and after hours is a red flag that it could gap down open tomorrow. So keep that in mind. That would be that is the risk of holding a stock that closes up 667%. 6%. That's on the month, but as you can see here on the day, it's up 615%. And so the risk is a potential gap down open tomorrow. Okay, so let's look at CNIT. Okay, so it closed up at 89% today. And unlike CNET, CNIT is actually running after hours. So it's pushing higher in after hours trading. You can see this was really strong into the close. It's busting through that upper Bollinger Band. Same scenario. If the candles work back into the bands, you have EMA4 down here at 211 is the key level to hold. There's a PSAR bull flip. There was a big giant volume spike. You have the bull crosses here on MACD. Notice how this is a thinly traded stock and it has volume today. If you look here out at the monthly chart for CNIT, you'll see that the key level that is breaking right now, that's the 200-month moving average down here at 244. That's the green line. That is the key level to close above for the month. Okay, so the next key level to break is up here at the 100-month moving average at 389. Notice this descending resistance line. Okay, this is a multi-year descending pattern. Okay, descending line. If there's a break above and a close above that level, that would be really bullish. So if you see a close above the red line and above the 100-month moving average, that would be incredibly bullish for the month. Okay, so if it could turn those levels into support, then it could head higher, and then you'd be looking at this $5.50 and possibly $7 level. Now if it fails to break above this $3 to $4 level, going this the top of this red line, if it fails to break above that level, that could signal that it's going to pull back into the bands, and then you can see that 50-month moving average at 244 tested. Notice how this has been big resistance. So yeah, it's going to need to break in order to head higher, or it will signal the top of the run. If you look here at CCIH, you can see here it's up 29%. It's in the bull zone on RSI and Fasto. They're both in the 60s. It closed today. It has a nice uptrend, and it closed above resistance. Okay, above the closing price here on the 21st, and then yeah, it closed above the open here on the 20th. And so now the big level to break is it needs to bust through the upper Bollinger Band and then get up here, up to the closing price up here around 305 or so on the 19th. That's going to be the next big level to break. Yeah, so as long as EMA4 support's holding at 207, it has a really strong uptrend going. If it stalls out here at 239, you could see it pull back, test these moving averages. The big thing is it pulled above this blue line, which is the 300-day simple moving average, and it pulled back and held that level. So as long as the 300-day simple moving average is holding and candles are forming above the middle Bollinger Band down here at 155, the uptrend is intact and signals more upside potential. Okay, so let's look at the CCIH monthly chart. So you can see here that this stock is coming off of the bottom. Down here in July, it formed July and August. It formed a bottom down here, and then it's been working its way higher. It got back above EMA4, which if you notice, April of 2016 was the last close above EMA4 until down here in October. And so that was a signal that it was heating up. That was also on a volume spike. And then now, you had last month a close above EMA's 4 and 8, and the upper wick did get above the middle Bollinger Band, which is this dotted purple line, and that's where the share price is hitting right now. That's 247. And so what you want to see is a close above that middle Bollinger Band for the month, and that would signal the possible start of a new uptrend. If you look back here in 2013, there was a close above the middle Bollinger Band, and that did signal the start of a new multi-month uptrend, and the share price had really had appreciated greatly between this break above the middle Bollinger Band and where it finally topped out up here, looks like in the mid-20s. So yeah, so that's what you're looking for here. If you're a bull, is for a close above that middle Bollinger Band to signal that this uptrend is intact and starting. The big clue is the giant volume spike. Look at the big volume behind the move. That's a signal that this has more upside potential. Volume usually precedes price. Okay, let's look at CCCR. Okay, it closed up 22% today. This is coming off of the bottom here. It's broke above RSI and Fasto broke above oversold levels. It closed today above EMA's 4 and 8. That's the pink and green line. So as long as it can stay above 167, EMA 8, it's in play. It's currently hitting a key key resistance level, which is the closing price here on the 27th. If it can close above that level and EMA 13 at 187, then the next big level to break is going to be up here at the 300-day simple moving average at 215, and then the middle Bollinger Band at 233. It has to turn that middle Bollinger Band at 233 into support to get a new uptrend going. Notice the big volume behind the move today. Okay, so that is a clue that it has more upside potential. It just has to stay above EMA's 4 and 8 support. Okay, let's look at CCCL. Okay, yeah, so keep an eye on this one. It has a nice uptrend going. All right, so it's riding EMA's 4 and 8 support higher. It's hitting the key resistance level to break, which is the closing price here. What is that? The 29th here. So if it can break above this 239, 240 level and turn that level into support, that's going to signal that it wants to head higher. If it fails to break above 240, then that could signal a temporary top, and the candles could pull back to test this middle Bollinger Band down here at $2. If it can stay above 240, then you're looking at a potential run up here into the 270s to test this recent high and possibly back up into the 3s. So yeah, so if candles keep riding EMA's 4 and 8 support higher, the chart is super strong. It just notice this has a super light volume. This is a thinly traded stock, so it really needs volume behind the move. Be careful trading thinly traded stocks. They can be easy to buy but tough to sell. Okay, so let's look at IZEA. Yeah, so this one is in RSI is up here breaking above the 70 level, and then now you have Fasto above 80. Down here, the big move is the break above the top of this channel. So you can see for the last couple months it's been trading in a sideways channel, and today it broke out above the top, which was the closing price here on November 21st. So that is signaling more upside potential. So now if it can break through this 590 zone, then you have the close from up here in September as the next key level to break, just above $7. So that's the next big level. If you can get above this 570, 580 level, $7 is on deck. So keep an eye on IZEA. It is making a bullish move today. Okay, let's look at HTGM. Okay, so the stock broke out today. It made a super big move, up 76%. Yeah, you can see it is at overbought levels on RSI and Fasto. Yeah, it was hitting the 200 and 300-day simple moving averages today, and it looked like it was maybe going to stall out. It gapped up open above the 300. So that's the blue line at 267, and then it was hitting that 200, and it looked like maybe it was going to stall out like it did before in November and October, but it was able to break above, and it closed well above that level. It closed up here at 403, so that was a huge close. If the candles do pull back in the bands, you want to see that 300-day or 200-day simple moving average at 297 to turn it into support. That is the big level to hold. All right, and so you can see the giant volume spike behind the move. Huge volume behind the move. MACD really got cooking. Had a parabolic spike. If you look out here on the weekly chart, you can see that it broke out today above the gold and the green lines, which is the 150-week moving averages. So that's a really big move above both those levels. You want to see them turn into support. So you want to see it stay above that 290 level, and then it's currently hitting that $4 resistance zone. If it can break above 4, then 5 is going to be a big level. That was a support zone from back here in 2015, and then if it can get above 5, if it can stay above 4, get above 5, it could work its way back up here to this 950 level, which was the high close from back here in what was that March of 2017. So yeah, it has a really nice move here. It bounced off of this 170 support zone, made a double bottom off that level. It's back above the middle Bollinger Band and the 50 and 100-week moving averages. If support holds, the uptrend should continue. If the candles work back into the bands, because this week's candle is pushing well above the upper Bollinger Band, you want to see that 100-week moving average and 50-week moving average hold. So you want to see the share price stay above 290. Okay, let's look at MCEP. So yeah, this was a nice move today. We had alerted this yesterday in the chat to keep an eye on it because the energy sector plays were running. This had closed yesterday. It didn't make a dramatic move. It was just looked like it was setting up. It's been in the sideways channel. Notice how it made a bottom in August and then again in October and then in November. So it made multiple bottoms. And what we were looking for was a break above resistance, which was the November high close, and then the resistance from back here in June and July. And so it did break above both of those levels, and then it broke above that 200-day simple moving average at 143. It's currently hitting some resistance from over here in June. If it can get through this 165 resistance level, the next key level to break is going to be the 300-day simple moving average at 184. So yeah, really big volume behind the move. Congrats everybody. Yeah, let's look at DSS here. So this stock is breaking above the red descending resistance line here. Notice how it's been in the sideways channel with a descending resistance happening here. It looks like a descending triangle, and so today there was a close above that level. It looks like this pattern is trying to break. It's holding the middle Bollinger Band down here at 172. As long as the middle Bollinger Band is holding, this uptrend is still intact. So what we're looking for now is that the red line to turn into support, and then a break above 220. So that's the closing price here on the 20th, and then if it can get above that 220 level, then you're looking at that upper Bollinger Band, and then the closing price up there at 260 as the key levels, the closing price on the 18th. If it can close above 260, that'll be the signal that it wants to break out higher. Notice there was a nice volume spike, increase in volume after very low volume during the walk down. So that's a good sign. If you look here at the weekly chart, you can see that it did break above the 200-week moving average a couple of weeks ago. That level has been turning into support. So you want to see it stay above 163. If it holds that 200-week moving average, then it could continue working its way up to that 300-week moving average at 439. So yeah, so this is a sweet move here. It has a nice uptrend. It's been pushing higher. It's been breaking above key resistance levels. It looks like it wants to keep working its way up. So we'll see. As long as notice how it's writing EMA4 support. It's been pushing really hard for multiple weeks ever since November bottom. So yeah, if EMA4 at 176 is holding, the long-term swing trade signal is just to keep riding. Okay, let's look at IBIO. So yeah, this closed up 26% today. It does have RSI at 60, so it still has room to run until that 70 overbought level. If you notice here, it's in the process of filling a gap. There's a gap in November between low of day on the 28th and high of day on the 29th. So it broke above the bottom of the gap level today, and it hit that 50-day simple moving average at 23, the green line. If it can close above that level, the key level to break is going to be this top of the gap, which is about 24.5, just below 25. And if it can get above that, then it's the 100-day simple moving average at 27. So yeah, so it has to close above the 50-day simple moving average to head higher. If it fails to break that level, that's going to signal consolidation, and then the candles are likely to work their way back, possibly down to test that middle Bollinger Band at 17. As long as the middle Bollinger Band is holding, the uptrend's intact. There's really big volume behind the move today, and it closed right up, closed close to high of day, so it looks like it wants to push higher, so keep an eye on it for a possible run up to that 100-day simple moving average. Okay, and then finally, let's look at BNTC. Okay, so this is a daily chart. Just want to show you here how it is a very low volume stock, but yeah, it's breaking out above resistance today on low volume. So I think it's one to keep an eye on. It broke above that 310 today, and it's pushing higher. It had this. It's been in for a few months here. It's had this ascending triangle pattern happening. Where there's the support is rising while resistance is staying horizontal, and then once you get a break above that horizontal resistance, then it's many times signals that it finally wants to head higher, and that's what it looks like with BNTC. It would be better if there was more volume behind the move. If you look out here on the weekly chart, you can see this week it's breaking above high close horizontal resistance from back here in April, and so if it can close above this 320 level for the week, that would be very bullish. Notice the long upper wicks on many of these candles, so you need to be on the lookout for that, for a pullback and to close below 320. It has to close above to signal that it wants to head higher. I mean, notice here there's like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. You know, there's 11 weeks of trying to break 320 with a close above with failing. So you know, this 12th week, if it finally happens, that should be your clue that it wants to head higher. Okay, so keep an eye on it. We'll see if it can keep heading higher. Notice it's making this move on very light volume. So the selling pressure is very light. Okay, thank you for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. And I'll post the link to the chat below the video. Okay, thank you.